Participants would be, on my left would be Mr. P. Jayakumar. He is MD of Bank of Baroda, and he is an ex-city banker for almost 23 years. And he will be the moderator of the panel also. Sitting next to him would be Mr. Vivek Agrawal. He is co-founder and principal partner at Square Global. Next to him is Mr. Amit Saxena. He is CEO of Unimoney. And in the last, Mr. Sunil Kanoria is sitting. He's Vice Chairman, SRAI Infrastructure Finance Limited. So we are going to talk about FinTech today. FinTech that is happening in India. FinTech is what? FinTech is portmanteau of financial and technology. As opposed to common notion, FinTech is not limited to automation of financial services, nor it is unbundling of financial services and connecting them using an automated assembly line. FinTech in its purest form is expected to ensure last mile delivery of financial services at minimum cost in the most resource efficient manner. Financial sector in India has moved from strength to strength, harnessing opportunities in business, technology, engagement, regulation, and services. Consolidating this spectrum into a compact business case to achieve digital dividend is essentially the silhouette that defines FinTech in its purest form in India. The discussion will be targeted at convergence of the policy and regulatory framework with the evolving technologies. Now that banks are rapidly reaching out to most Indians, can technology make their transition towards being consumers of other financial products friendlier? How financial technologies can make the transition swifter? For delving into this and discussing this at length, I would request Mr. Jayakumar to initiate the proceedings. Please, sir, the stage is yours. Thank you so much. Yeah, speaker. Is it working, sir?
It's working. It's perfectly working. Good evening. Thank you, Mr. Gopal Agarwal, member of the board of Bank of Baroda, and also all your colleagues at the Center of Economic Research, Economic Policy Research, for inviting us to the Indian Banking Conclave and to discuss on this rather exciting subject of FinTech for New India. May I take a few minutes to introduce my members in the panels. Starting from left, furthermost is Mr. Sunil Kanoria, a very old friend of mine. We have worked in the financial market since the 1985. Sunil Kanoria, company Shrey, he co-founded with his brother, as a market leadership in equipment finance. Coincidentally, next week at Bank of Baroda, we are signing an agreement with them to work jointly in bringing equipment finance to our customers and our banking products to their customers. In addition to that, he runs a program called Sahaj, which does a number of things, including as corporate BC, but provides services to G2C, financial inclusion, financial services, utility bill collection, mobile DTH top-up, e-learning, FASTag, etc. As of now, they have about 75,000 Sahaj Kendras across the country. I would like to take this opportunity to introduce another old friend of mine and a colleague of mine from Citibank, Amit Saxena. Amit Saxena's firm is UAE Exchange, and they are the largest player, one of the largest player in the foreign exchange market. UAE Exchange is present in over 40 locations around the world. They are one of the leaders in market forex and remittances. They work that about $30 billion of money moves through them. These are small ticket remittances from various workers. They are now global in character. In fact, we helped them to acquire a company called TravelX, and if you go to the Heathrow airport, they are the ones who refund, for example, the customs and other duties. Today, they are setting themselves as a full-fledged non-bank financial services company and adding a range of financial services for consumers and corporates. And given the fact that they see a lot of flow from UAE to India, I think that with that data, they probably are going to do a lot of things, and we could hear Amit speak about it. The third person in our panel, and who I've heard a lot about but interacted very little, is Vivek Agrawal, co-founder of Square Global. Square Yards is a prop tech fintech player on an online to offline transaction and an aggregator platform for both real estate and mortgage. 4 years into inception, Square Yard has scaled to over 2,000 people. It's a global presence, or at least a partial global presence, in over 10 countries around the world. It's backed by partnership with more than 500 plus developers across the globe. Square Yard now helps to transact over 10,000 transactions for $500 million per year. In addition to that, their mortgage lending arm called Square Capital did about nearly 700 million dispersals in the last 2 years over south of 7,000 transactions. We could listen to you on your business model. So from my side, I work with Bank of Baroda as was discussed. And what we have seen over the last 4-5 years is this extraordinary growth of the FinTech. In part, it has been facilitated, this growth has happened to enormous amount of facilitation by the government in number of ways. One, this government has been fostering a lot in terms of entrepreneurial culture, Skill India, Make in India, and also the variety of programs around Stand Up India, etc. They have done a lot of changes with respect to the foreign investments, FDI in particular, which has enabled facilitation of flow of capital, both domestic and foreign, to fintech ideas to bloom. There has been from this government a relentless pursuing of digitization of transactions. India Stack and various other platforms that have been built, such as eNAM, Port Communication System, Udemy Mitra, Threads, to name a few, are all fostering the digital economy. And now, of course, the government has launched a financial incentive that hopefully propels adoption of digital forms of payment by common folks. Bank of Baroda, I would then at some point of time talk about Bank of Baroda perspective on the fintech industry. So may I then start kicking off the discussion? Sunil, if you could just share your top perspective and some opening comments, and then we would go through that, and then I would then put some questions to all of you. Thank you.
Thank you, sir. Friends, I think you all have heard and known that how the fintech is really transforming the entire financial sector globally. And I think if I look at many markets and my experience in some of the markets, I think India has evolved very, very fast, more particularly in the last few years, as Mr. Jai Rao said, that this government has really pushed a lot of change in digital development in the country. So that has really pushed this evolution. And I think this will be a very powerful tool, more particularly for countries where the financial services have not been able to reach to the last mile. But I think a couple of things which I feel it is important for the government and for the industry to work together to create mechanisms is one on the regulation side. Because financial sector is a regulated sector, and they're very strongly regulated, and it's so required. If you look at two parts of it, one, you have the liability side and you have the asset side. A lot of work has happened on the liability side and the overall banking services in terms of payments, gateways, in terms of e-wallets, in terms of transactional over mobile and various services. And that's where what we did is we created Sehaj as a marketplace and a portal for providing services in rural India. That's where, as Mr. Jai Rao said, that we have set up about 75,000 centers in villages. It's a brick and click model whereby you need an assist model at the village level, and all the services are provided by the portal, by the marketplace which we have created. And we have been able to reach out by providing multiple services, whether it's banking correspondent, financial services, insurance selling, etc., through that. And I think this is going to increase a lot more substantially. But you need partners. You need to work with the banking system as partners to do that. On the asset side, there's a lot of lending which is started to happen slowly. There's a lot of evolution which is working out in the B2C, from the business to the consumer side. I think a lot of opportunity is also there in the B2B. That is the enterprises side. In the businesses, they need financial solutions on the lending side. And that's where we focus, and we have launched iQupo, which is basically where you can provide equipment solutions, equipment financing solutions on the portal. and last 8-10 months we have developed to try and build that platform. Again, working with financial institutions, banks and all to come on the platform and provide the services. But my learning has been on the lending side, whether it is consumer or the enterprises. One of the key strength which fintechs can provide is the risk engine. Because of the kind of transaction, the data working which it can capture, partnering with banking system, the risk engine can become a lot more robust, lot more evolved, using AI, using your data analytics and the kind of data which you could have, whether it's organized data or unorganized data. You could use the social media network, you could use the database in the country to understand behavior of the customer and be able to take the right decision and reduce the cost of risk in the country within the financial system. And if you reduce the cost of risk, imagine the kind of cost benefit on which we can give to the system and the economy, where then the interest charged to consumers and enterprises can come down substantially. And I think that is where there can be a huge value proposition to the economy and to the system, which fintechs can provide. I have had experience in, we have a bank in Austria and we just launched the digital banking there. Basically is the risk engine. A robust, strong risk engine for a lending platform would be crucial for the success in the future of it. And that is where I think there can be a lot of value addition. But overall, I would say that working with regulators to ensure that they are up to speed, to ensure that the expertise, the knowledge which is being brought in into the financial technology in the fintech side is not kind of limited because of old regulatory framework. That has to keep pace with as the evolution happens. So these would be some of my initial thoughts.
Amit, would you like to comment?
Thank you, Jaya, for the kind introduction. So our company, Unimoney, essentially has been a leader in remittance and forex services.
A small switch on the side,
okay.
You can press it here.
So thank you, Jaya, for the kind introduction. So our company, Unimoney, has essentially been a leader across the world in forex services and remittances. We move about $30 billion of remittances, worldwide, and similarly for forex about 60 billion. And coming to India, we move about $7 billion of remittances every year into the country, about 1 million, 1.25 million customers. Now the problem that we've been looking at is that yes, there is a customer there. How can we have more and more financial services getting through to this category of customers? In the last, like it was mentioned, last few years, fintechs, fintech has been taking great strides. And one of the things that we've been looking at is that how to get all these technologies put together across the financial services spectrum, whether it's lending or it's payment services or it's wealth management, and get more and more customers into the net. And frankly, why? Because it's a challenge and an opportunity before us. If we look at our country, and the topic for the day is fintechs for New India. So what do we want New India to be like? We would want more and more people coming into the net of financial services. That's how we'll all grow as a country. But if you look at the stats, it's fairly stark. It's only about 15% retail to retail debt to GDP penetration that we have. If you look at small businesses, by some estimates, it's only about 80% of small businesses do not have access to formal financial services. And that's where all of us are trying to see that how do we use technology to further this cause. And essentially fintechs or technology has to be used for, I think, two things: access and assessment. Like Mr. Sunil said, one is access. Yes, last 3-4 years we've seen a quantum jump in fintech or financial services reaching out to people, or in terms of the technology highway which the government is trying to create through either to the bank accounts or Aadhaar or mobile. But if you see overall, still that penetration is more in the larger cities. It's more towards the higher strata, of the society, and that is something that is a challenge that all of us are facing, and that we have to pull together. And I think the a bit of a answer to that should be that we have a lot of technology available now across various financial services spectrum, but I think we also need a change in the business model, business approach, and the mindset shift to make financial services accessible at a more affordable rate to a larger section of the society.
Vivek.
Hi, my name is Vivek Agarwal. I am the odd one out here, so all industry stalwarts sitting here. So we
He's
are
the richest guy anyway.
Mike.
It's all right. You got to push the mic a little bit to your front. Yeah.
So we are a 4-year-old startup. We started sometime in 2014, and what we do is we distribute real estate portfolio of developers. So we have tie-up with 500 plus developers. We distribute it to our clients worldwide. We have now expanded to 10 countries. We have over 1,800 employees. So we are essentially into an online to offline world. We call ourselves like a prop tech company. We are bringing technology into the real estate world, the real estate distribution. So that is prop tech part. Sometimes back, 2 years back, we started a marketplace lending company called as Square Capital, where we essentially followed the same model. We tied up with around 60 plus banks, and we started distributing their mortgage portfolio. So we had an in-house business coming from the real estate that we sell, so we also do mortgages. And then we also started sourcing independent mortgages. So our mortgage business has also grown to a fairly large volume. We do close to 35-40 million of, we facilitate close to 35-40 million of disbursals every month. So now coming to the topic of today, which is FinTech for New India. So I'll just briefly talk about, so what does FinTech bring to the table, right? So FinTech has been in existence for over the years, right? So the day we started net banking, the day we started stock transaction platforms. So banks were the early adopters of FinTech, right? They started this FinTech revolution. But somehow during the years, banks, because of the sheer size that they operated, they actually slowed down in adoption. And then these new age nimble startups that emerged, they started to disrupt the various parts of the value chain. Okay, so if you look at FinTech as such, so what does FinTech brings into the picture? It brings speed, it brings efficiency. What Amit said, it brings the access and the assessment part, right? It also reduces the cost, right? So, and where the banks were lacking is that because of the sheer size that they operate, they have a traditional way of credit assessment, right? So they had a collateral based working model, and they perceived this new India, which is new to the credit, which doesn't have a proper banking assessments, which doesn't have a formal way out to access credit. So they perceived it to be too high risk, and that's how what we saw is emergence of these alternate lending kind of startups. And you would be amazed to know that there are like almost like 225 alternate lending startups existing in India, which are actually augmenting the credit worthiness of our people, our new India. Okay, so how do these alternate lending startups work? So other than the traditional assessment, which is based on a credit score or a banking statement, so they they actually collect data from various sources. So they track the location of a person through a mobile. They track the utility payments. After demonetization, lot of payments, micro payments have moved to a digital mode like a Paytm or a MobiKwik. So they assess the digital footprint of that person. They do a social media mapping, right? And then what they have done is they have actually built algorithms on top of this data to assess the credit worthiness. So which is a person who doesn't have a banking history may get a loan through these alternate lending startups because of the model that they have developed, and it's fast. So nowadays, like if you are a salaried person and earning a decent salary, you can actually get a personal loan disbursed within 5 minutes through applications like a Money Tap or Early Salary, right? So what has happened to salaried person microfinance, it has, if you have to build an inclusive India, if you have to get access to credit to a large population, which we call the Bharat, so these models have to percolate, new credit assessment methodologies have to be built, and that's where we see the role of fintechs. How do we see the role, how banks can collaborate with fintech? So I think Mr. Jayakumar would be telling they are already doing. So there are essentially two types of models. So one is the co-lending part, where the bank would co-lend with the fintech. The credit assessment would be of fintech, but the bank would put the capital, right? And then they share the risk. The second model is a lot of banks are actually incubating these startups, and they are helping them. They are actually providing access to their customer base and helping them commercialize and stabilize the technology. So this is, I think, the right direction to go, where the banks and the NBFCs work with the fintechs and bring more people into this credit program. I think the only way India has to grow is when these guys get access to credit, and I think technology and fintechs have a large role to play in providing this credit.
Before I ask the panelists some question, I just wanted to make a brief statement from a bank's perspective. Now, the way we are trying to look at Bank of Baroda is that we have three verticals that are focused on the fintech space. The first one is about building fintech partnerships. You know, we take time to understand the business model. We also have to work to integrate their system with ours so that we would have a frictionless model. And so we have a very dedicated organizations whose only responsibility is to tie partnerships with fintech, and we now have over 33 partnerships that are moving along. The second area in respect of which we're looking at is having got these partnerships, how could we mutually scale and how we could mutually benefit. For example, we have a white label product called M Invest, which is Bank of Baroda's mobile application. Basically, it helps you to make investments. Supposing you say, I want to fund my daughter's education, for example, and that's going to happen 5 years from today. By getting into M Invest, you can actually plan for that investment in a model. We actually don't run that program. It is run by a fintech company. It just resides in our system. And I think it's better for us to focus and get our customers to sign on than to spend a lot of time in trying to create this product itself. So there are a number of ways we can work in partnerships with them. For example, our underwriting of new to bank customers is done with a fintech company called Credit Monthly, which is based in Chennai. And they have built the algorithmic model by which we actually finance. We work with Flipkart and Amazon and a few of those people in terms of providing working capital line to those people who host products in Amazon. And then with data that they have, we're able to identify customers without amount of data with respect to or collateral based lending. So it's all related to data that we work. We work with a number of companies which are working in the Mudra space in terms of creating entrepreneurs. We work with institutions like Uber, Swiggy, which delivers foods, and they finance entrepreneurs running scooters, for example. Amazon, Flipkart. There is a new institution that we just recently signed with called Oyo, which takes small properties and makes them into rental properties. And we finance their when the property comes on, there is a certain amount of renovation and those kinds of stuff to be done, which we finance. And so there are these plenty of partnerships that we have got. We don't know which one of them is going to be the next Amazon or the next Microsoft, but the best way we can work is to work with a large number of people, some of whom are going to do wonderfully well, and some of them are not going to do, but through this process, we're also kind of hedging our bet. The second change that is happening to our system really is that we are developing what I call as a FinTech mindset. What does that mean? It simply means we start thinking like these guys. We can't be them, but we can start thinking like that. And so that essentially means that we're all thinking and asking this question: how do we provide products and services to the customer in the most frictionless manner? That on a contactless basis, without having to provide data, on a digital basis, how could we do that? At the heart of that exercise, as we have tumbled and understood, is what is now called as appification, which is that everything is available in the form of applications, which you can download. And we work out a program called Finacle 10, which is called an open to API application, which enables this to happen. Now let's just take an area like giving auto loans to customers. The then model and the current model, we are working together. In the then model, our objective was somehow to give the loan faster. So if Bank X is giving in 2 days, Bank Y will now say I can do it 1 day, and so on. But supposing we were to define a construct that you come to a Bank of Baroda's branch and you say, I have 5 lakhs of rupees, what would be the best car for me? And in the next 10 minutes, we help you to identify the car, buy the car, register the car, deliver the car, pay the pay the dealer. That is the kind of application we need to make. And so this whole process of appification essentially means a mobile basis in which either on an assisted mode or a non-assisted mode, you can do transaction in a very frictionless form. That really is the heart of what we are trying to engineer. It's not very easy because our systems are, what they call as vintage systems, and modern systems are different, but it's not so difficult that we can't achieve it. As Darwin would say, it is the species that survives is not the strongest. The species that survives, which is one that is most adaptable. And so with this time and phase, we are also trying to see how we can adapt to this generation of changes that are happening. When I was earlier, I had gone to Korea. This is about 10 years before. I'm just coming back to the policy aspect. And I was surprised to understand that their cost of giving a mortgage loan was cheaper than ours out of Chennai, notwithstanding the fact that the wage cost was 10 times more. So if you went to Korea, this is 2005, 2006, all you needed to do was to give your ID card. Then, and you decide which house you wanted to buy, you said that. And our fellows, we were all coming from, there was a company we had acquired, and we're not so much understanding what is Korea, but they told me, we don't ask any income document. Oh, we don't ask for property paper. Oh, we don't ask for valuation. Is it? Then how are you underwriting the transaction? And the way it was being done was from the identity card, it used to go to the National Insurance Bureau and take the salary data. It used to go to the record keeping and digitally validate the property. And it used to go to some other system and validate the price of the property. And so within a period of 5 to 10 to 15 minutes, the whole thing would get completed. Now think about the productivity of that system. And that's what results in a dramatic reduction in cost. So as we think about policies, it's not about FinTech and us and developing system. How is that we develop the broader macro system, which is how does the real sector interact with the financial sector so that productivity grows amazingly. Now, for example, in Andhra Pradesh, they're trying to bring blockchain technology with respect to land records. That would be a terrific innovation, because then we could step aside verification of property, 30 years of title record, transfers of document, everything would happen. And then worrying about how the land record office would somehow fudge the system and somebody else will be the owner of the property, etc. All of that just goes into the background. And now we are all focused around saying, how do we provide a better product to the customer than to say my valuer is better than your valuer or my lawyer is better than your lawyer. You see? And so on a policy aspect, what I would say is the intersection between the real world or the real market and the financial market, if that we could focus on and digitize them in a number of areas, then the impact on productivity would be extraordinarily dramatic. And just to go back to the Korean example, you could pay people 10 times more and yet your cost would just be the same. or alternatively, you can reduce the price of the product to the point that more customers will be able, more people will be able to afford. It all depends. So I would say, from a policy aspect, I would say, let's focus on this intersection set between the real sector, which is land, building, various kinds of things, and the financial sector, which is us, so that in a seamless fashion, the entire process could be very efficiently delivered. And that, I would think, is more important from my vantage point of view on policies, because we can always go to RBI and tell them, change this or change that. But how do we get the land record, for example, digitized? How do we get other information in the real sector digitized? Because these are all properties of the state, so to say. And if you can do that very efficiently, then you would find there's a dramatic improvement in productivity, dramatic improvement in access to credit. And those are the kinds of things now, as we move to the next leap, we need to focus on. With this, I would like to go down and ask a few questions to all our three participants, three panelists, sorry. To Sunil, there's been a lot of discussion around your initiatives on Sahaji village. What is the kind of transformation you've seen through that activity? And with that as a background, the Aadhaar stack and everything else, how do you see that future rollout in terms of financial inclusion access? And what do you think is the next wave in terms of financial inclusion?
Well, I think if I take the journey of eSahaj, which we started almost 9 years back, it was a program of the government. It was a PPP program whereby the government wanted to provide e-governance at the grassroots level, which is the village. And we got interested. We felt that it will be a good way to bring in technology and reach out to the grassroots level by providing all kinds of financial services. When our journey started, let me share, we had a lot of challenge. Because the e-governance, we set up these centers. Initially, I remember we had about 25,000 centers we set up in UP, Bihar, Orissa, Bengal and Assam. And that's where we got the mandate. And these were physical centers. What we did is that we went to a village, identified a village level entrepreneur, preferred a woman entrepreneur. So about 30-35% of our centers are owned and operated by a woman entrepreneur. They owned and set up these centers in villages. And mostly young people between the age of 20 to 30, 35, and they didn't have anything much to do in the village, so they started this center, and many of them are doing very well. Initially, the government services were very, very slow to come. For a couple of years, government services did not come in because, as rightly Mr. Jayakumar said, that the real world was not connected to the technology. And the digitization had not happened. It was very, very slow. Many states didn't virtually even start. I would say UP was the number one to start with, especially when the previous government came in of Mr. Yadav. And that time, a lot of changes happened and the e-governance part kicked off. Other states now, in the last few years with this government, things have picked up a lot. So we provide e-governance through these centers. But what we did is, in order to ensure that the center runs and earns itself, it started to provide e-commerce. In that, primarily was financial services. So whether it was insurance, whether it was Aadhaar, again, Aadhaar, we faced challenges last year when the Supreme Court came around that it has to be done through banking system. So now we are working with banks to assist them. So you had lots of bottlenecks, and that's the reason why I said that regulatory framework and the policy framework needs to be ahead of the curve to be able to ensure that the industry and the benefit overall to both to the real world and the financial markets get linked up. So therefore, as rightly said by Mr. Jayakumar, that is one of the key things which these conferences, these forums, various industry bodies need to take up with the government authorities to ensure that this evolution and these changes happen a lot effectively. But the way we now see the kind of volumes and transactions coming in from the e-commerce side, e-governance side, and even then we added e-learning at the village level. So one could come to the center and get educated on computer training or English speaking, because now you have all these programs through the net. So these are having a far-reaching implications in these centers. I believe this is a way forward to connect the grassroots to the urban, to reach out services right at the bottom level. There is a lot of push by this government to support and I'm sure there'll be opportunities, a lot more to come in, and it has to be a collaborative approach. So partnership with the financial world, partnership with other service providers and stakeholders who can come on and build in. But we firmly believe the volumes which is picking up will only be growing manifold.
Thank you. Amit, may I ask you a question that as a new age fintech company, large remittance player, could you think about any of the use cases you have where you use remittances as a mechanism, as a data pointer mechanism to provide mass credit to customer, or if you have not, are there any plan that you're currently working on which might be useful to think about?
So yeah, so yeah, we do get about $7 billion of remittances and 30 billion, worldwide. And the problem case in front of us was that how do we get this customer or, to have more usage of financial services? So we start looking at our organization from a different angle itself. We said, that let's look at an organization not from a product perspective, but from a product to partnership perspective. Because here is a customer who's come in, there is a remittance which is coming in, or the customer has, some income or a status, currently. So how do we look at this customer and provide multiple, products or, or solutions to the customer? So we looked at, so we designed a company essentially across 4 spectrums, or what we call core IPs. One is access. Can we access this customer in a more simpler way, download our products and services through various partnerships and get to this customer on the mobile through our app assisted, or the customer, managing it himself or herself. And we also have about 12,000 agents, and about 400 branches through which we are trying to disseminate, our products and services and provide access to the customer. Second is looking at the remittance data, looking at other parameters. We said, let's look at, can we assess this customer in the best possible manner? Not only in terms of only credit algorithms, which have come in, or, other data points can we use, the utility bill payments, or, the track record of the remittance which itself has been coming in, or other data points. So access, assessment, and third, large usage of analytics to figure out as to which product or which solution the customer may be looking for, and which is the best solution for them at the most affordable rate. And we have products across, loans or wealth management or payment solutions, forex, remittance itself, and domestic money transfer, and other services. So these 3, access, assessment, and analytics. And then finally, what we also realized is that we have to go back and ask ourselves a question as to what business are we in. Are we only in the business of financial services, just providing, money and then the customer uses it? Or can we go a step further and provide a platform for the customers for multi-products and multi-services, where through our channel itself, the customers can access those services or products? So for instance, if somebody needs to buy a television or a refrigerator, the money is there, we can provide, extra money in terms of credit, and can the customer, access, through e-com platform and get, that product, or somebody is looking at, educational services, for their kids, and that can be provided. So we are working across, these 4 core IPs, access, assessment, analytics, and a platform approach to provide, multi-products and services to the customers, and going beyond financial services.
So Vivek, I just wanted to chime in and ask for your views around this use of technology, financing, and how does that work to a larger initiative of the government and a desirable initiative, desirable outcome, which is housing for all by 2022, but whether it's 2022 or 2023 or 2024, whenever that is, whatever be that period, it's still quite dramatic if housing for all could indeed happen. How do you see from the prism of the developers and all of the things you do with the technology of that goal could be achieved?
Yeah. So if you look at the last 2 years of real estate. So real estate has been on a slowdown since 2014. Uh, in the last 2 years, government has taken many initiatives. So be it like housing for all till 2022. Government has introduced PMAY, CLSS schemes. There is a smart city mission which is to develop tier 2, tier 3 cities. So government has put a lot of thrust in this sector. But if you see who are the real beneficiaries of these housing for all, again these are the people who are like underbanked and underserved, which are beyond the credit assessment mechanisms of today's banking systems. Okay, so what I think you gave a very good example of Korea, where the entire piece from a real estate transaction to a mortgage happens within 5 minutes, right? Uh, and I think to bring those kind of things into picture, it would take some time to get all the land records digitized. It would take time, its own sweet time, to develop a blockchain for real estate. But in the meantime, what we are trying to do, and it also applies to affordable housing, is we are trying to build a platform where we bring everyone onto the same platform. So there is a buyer, there is a seller who can be a real estate developer or an individual seller. There is a mortgage agent, there is a valuer, there is a real estate agent or a sub broker of ours. Okay, so all of those come onto a single platform, and then they interact and reduce the time of onboarding. So 1 year back, our time from a real estate to a mortgage transaction was somewhere close to 45 to 60 days. So what we did is we tried to build a partially digitized digital mortgage journey, and we have brought it down to somewhere close to 21 days. Okay, still it's a very long time, but what we are building through this platform is that everyone can come onto a single platform, and then the onboarding, your eKYCs, your credit scores fetch, your PAN card check through NSDL, okay, all your account statement verification through third-party services, all of those can be done digitally, and banks can take faster decisions. Okay, so what it has done is it has reduced the cost of credit decisioning, okay, for the banks, and it has improved the TAT for the customer. So earlier a customer used to wait for 45 to 60 days, now it's happening in 21 days. So the same thing has to be extended to a affordable housing kind of paradigm, right? There obviously we have to bring machine learning, we have to bring more credit algorithms into it. First we have to spread awareness also. So a lot of people who are the real beneficiary of affordable housing, if you ask them, a guy on the street, he won't know what are the benefits that the government is providing, right? So I think a lot of initiatives have to be done. Fintechs have real digital marketing power. Okay, so if you see Paytm or a MobiKwik, they have more transactions, more customers than a bank, okay, or a telecom company. So I think the government and these fintechs, they have to work in tandem. First is to spread awareness about these initiatives, the benefits that the common guys are getting through these programs, and then second is to bring them into the financial inclusion space through alternate lending. Okay, I think that's the way to bring fintech for India, which is not the already banked India, but an underserved India, which is, we call it as the new Bharat, or so there is a India and a Bharat. So what fintechs need to do is build for Bharat rather than India, and bring more people into a credit program. That's the only way to grow.
Thank you. I just will do a quick check on time check. Do we have any more time? Should I just wind up the discussion, because you're a very important speaker after us? Okay. So I do think the program is staying to course on time. So let me Let me use this opportunity to thank our panelists and also try to do some kind of summing up in a couple of examples. The other day we had some discussion in the FICCI IBA forum, and there was a case study that was presented to us. This relates to a person who's delivering papers, newspaper, and and spends a lot of his time collecting money for the people whom he had delivered, and the inability of the banks to lend it. Now in the new age, what is happening is he's using WhatsApp to send the bill, and therefore he's saving enormous amount of time in terms of not having to follow up with people to get money. And second, because this is being digitally done, there is an ability to lend money against the transaction. That's one example I would do. The second thing I think I would like to sum up, we heard the word platform many times now today. One of the things that's being now discussed as a big change that is happening, and we are seeing it in Bank of Baroda, is this migration from what is called as from pipes to platform. Previously we had pipes, which is I interacted with you, bank as customer, and we were basically trying to make ourselves more efficient by making the pipes work better. Then this whole concept of platform came, and it was developed by the theory was developed by person Salil Gupta, I think, and Chaudhary. And the view here is that we are going to bank the entire ecosystem. So for example, we are trying to work on building a platform which we are calling it Kisan Sathi, which effectively would mean that a number of people are onloaded to a platform, seed manufacturers, procurement people, logistics people, and our customers through the use of bank account would be able to access these many providers. So we are now talking about a Bank of Baroda agricultural platform as distinct from giving loans to customers and collecting it. And if you look at the number of platforms that are being developed, for example, a PCS, which is a communication system for port, it's an incredible thing that by the time the ship comes into the port, pretty much all the payments could be done. The forwarding agents would know, the various distributors would know, everything would happen, and therefore the shipment of the good from the ship to the warehouse would happen instantaneously and seamlessly without papers flowing through, as an example. So this whole Udemy Mitra is another wonderful portal that is there. I can see eNAM or any of these portals directly talking to Threads, which is as a customer or a farmer sells his product, gets a bill, pushes the bill to Threads, it gets discounted, it gets paid. So this platform process that is happening is quite remarkable. So in conclusion, I would say the following are some of the themes that I would discuss about. This whole FinTech is around helping microcredit, using information, speeding approvals and reducing process cost. Second, it's leading to and will lead to disintermediation. Threads is a case in point, and there will be more peer-to-peer communication decisions. Third is it's moving away from assets and finance and paperwork to information based on data. When the consent layer of GST comes in, it's going to be remarkably open up lending to the MSME industry. It's about linkages, the ecosystem to single company. Today we do supply chain financing, which we call as derivatives of derivatives. Essentially, we have, let us say, a builder. And now he's selling properties, he's constructing properties. He has got a lot of receivables from masons, from, bar benders, a whole lot of people. Now, how about putting a financial system or a banking system in place such that based on the inventory or the production schedule, we can actually finance a bar bender because we know the cash flows are going. It's a powerful use of analytics. So the whole system is about moving from individuals support to single company support to an ecosystem support. It's about partnerships versus working in silos. We have 33 partnerships. Just as a trivia, there are 1,200 FinTech companies. For example, the wallet space, the largest is Paytm. There are so many wonderful players there. The other thing is this whole system of dicing of credit, dicing of liquidity is going to happen because of the way these FinTech systems are developing. So in conclusion, I would say from a banker's perspective, and surely from everybody's perspective, there is nothing to fear from this evolution. If anything, this provides us with a remarkable opportunity to collaborate and grow. Thank you very much. If you have time.
So anybody asking for questions?
Yeah. In fact, I just have one question. Sir, this FinTech, is it going to be a alternative mechanism available, or is it going to over a period replace the traditional way of play?
Sunil, would you like to take a shot at the answer on that?
Well, as Mr. Jara also said, it is a collaborative approach. FinTech on a standalone, because of financial services being offered, there will be always a regulation. So it is going to be a collaboration and partnership through which there are certain strengths and working which is required, more particularly now with the regulation on data and all also. You need the banking system or you need the financial sector. And these FinTech work together to create solutions, overall solutions, which will be beneficial to the customer and beneficial to the overall ecosystem. You will have more service providers, stakeholders, and that's why, as Mr. Jara said, it's a platform. You will create platform where bankers would be there, where service providers will be there who are selling any assets, goods or products or services. You will have the customer coming in, and that's where I'll share our experience in our iQpo. That's what we are doing. We are creating a platform, and we are bringing a marketplace of all the service providers in the ecosystem relating to equipments. And that's where I think it will not be banking system. Traditionally, it will not be FinTech independently. It will be all coming together.
Any more questions? Yeah, please go ahead.
So I'd like to, this is a wonderful panel. Thank you all of you for sharing your information. I'm Tali Bhasin, and I am setting up a FinTech accelerator. And I'm looking forward to really network more with all of you. But my basic question is, what do you think about localization of the data in terms of some of the let's say, for example, smart cities are coming up. You have a lot of data which is happening, and there is a lot of new data which is getting generated in the real time. How do we really monetize that data, especially with reference to the FinTech? And also financing the city's development efforts. So essentially, the current FinTechs are all trying to just provide financial services in terms of individual, but when we talk about a collaborative kind of information, we can actually kind of leverage the infrastructure development in terms of really leveraging the data which is currently available in that city. The second thing that I'd like to really point out, we have in India not one India, but we have 35 states speaking different languages, and we have a variety of languages, and the kind of disconnect, just you go 15 kilometers away from the main city, you have a different dialect and you have a different thing. How are we really solving that particular problem? Because that is a serious problem when you really go to the Bharat.
Would you like to take a shot at answering that? Because the word real estate was mentioned, so I thought I should give it to you.
So on the smart cities and the infrastructure, so I would take the first part of the question, which was on how would FinTech actually help in creating more infrastructure. Okay, so obviously FinTech won't build that infrastructure, but what we have seen in real estate is there are like alternate ways of financing infrastructure. It can be a building, it can be a bridge, it can be a road. Okay, so specifically in the housing segment, there are financial instruments like REIT, okay, which are real estate investment trust. In US and UK and other parts of the world, there is a crowdfunding model of investment where a group of people come up and you actually, if you see a building, a commercial building, they divide it into 10,000 parts or 10 lakh parts, okay, and each unit sells like a mutual fund or a piece of stock, okay. So there, the FinTechs are actually disrupting the infrastructure model where the traditional ways of financing a large infrastructure product would be to go to a bank or a financial institution or a private equity investor but through crowdfunding and REITs, these are being actually funded by the retail investors. Okay, so I believe that the first REIT in India is going to come very soon, and I believe after REIT there would be a crowdfunding model also, which will come into picture, obviously with the help of regulations, where people could come together and fund the infrastructure. And that's a way I believe smart cities have to be built in a PPP mode rather than the government putting all the money. So that's the first part of the question. So
I think like everything else, any changes brings in new sets of winners and new sets of losers. This is an inevitable part of that is there. But I think that a lot of people are being smart who are capable of using data, you know, getting to compress them, to read trends from them and use them, are obviously going to be the most successful people at this point of time. And so we now, for example, I had a FinTech company come and meet me the other day, and they said to me, I'm going to discuss with you the quality of your portfolio. Now, they have no access to any information of mine, none. And yet they presented to me a very credible story of how our portfolio looked. So what they did really was they went into various documents that are there. For example, if you took a loan, you registered the document, and from the registry you could find out which banks lent, what interest rate was there, what fees was there. From the MCA record, they could figure out how many directors have resigned or rejoined. They could figure out from the credit bureau data how quickly the credit was built. And using this, they presented a comprehensive story without my getting involved or sharing one bit of data as to how this information of the bank is present. Now, it is not 100% accurate. It's probably 70% accurate or 60% accurate, because not all customers the information is available. But I was just thinking, I was telling him, if this is the kind of data you have, and let us say move from 60% to 90%, why would analysts come and talk to me and ask me about Bank of Baroda? They might as well sit with you and figure out the quality of my portfolio and draw whatever conclusions they want to draw. This is a remarkable change that is happening. Again, it's not so uniform, but you're finding many bright sparks of people who are coming with this. We work with a company called Probe 42, which we use for our credit underwriting. And pretty much it gives me enormous amount of information which is currently not available. They link it, bring it together, synthesize it, present it. And so I think it's a very interesting era, that there is a lot of data available, but some people are going to be smart about pulling them, analyzing them, understanding them. And what is going to be important is for folks like us in the bank, we will be users of those services. So we really don't need to be so worried about that. If somebody gives me good quality information, we will just take it. Our goal is to provide better products to our customers, raise more deposit, lend more money. We're not really interested in trying to build this infrastructure. So what we are trying to do is to basically meet these FinTech companies and understand them. And there are so many of them. And our job is to pick from them each one's capabilities, and then how do we bring all the data, synthesize it, and bring it forward and use it. So we still are in the business of lending money and raising deposits. But instead of looking to one person for data, one credit bureau for data, we're now getting a whole lot of information. And what we are now building is thinking about how do we take this many information from many sources, how we crunch them, and how do we make an executive summary or a meaning out of them. So, you know, it's quite remarkable. I'll give you another case study. This is on giving housing loans in India. Now, I know about companies where 20% or 30% of the loans are straight through processes. So that is, for example, Yardley, Perforce, etc. So if you access them and you give your password, it just goes and brings all your bank statement and delivers it. Then there is an ability to get information from tax, for example. All right? There is a simple application on the mobile. You download it, you go to your home, and the way in which you behave will tell you which is your residence. For example, you are there in some place between 9 p.m. in the night to 8 a.m. in the morning. So they don't do any physical verification of residences. It just is based on information. So what we are finding is this is a very creative process, that there are enormous number of people who are trying to solve different problems. But for us, it's about picking up these different people, integrating them into a system and say, yes, we can give 20-25% of the customers, even without coming to us, we can give a loan because we get this information from this source, we get this information from that source, and we synthesize all of it and put it together. So it's quite remarkable what is happening over here. We don't necessarily see it on a day-to-day basis, but 5 years from hence, when we look back at the whole information, it looks a very different place. Same thing with GST, same thing with the Jandan, the same thing to do with mobile applications. There are so many things that are happening, and I just think it's going to be a very interesting decade as we look forward to. Thank you very much.
Thank you so much, sir. So FinTech has a very bright future. We see fantastic things happening in future also. So we would like to present some mementos to all the panelists. So I would request Gopalji, is he around? Anilji, you can do the honors, please. So to Mr. Jay Kumar, please. Meenal Sharma, to Mr. Vivek Agrawal. Mr. Rajiv Singh to Mr. Amit Saxena. And Veni Thapar to Mr. Sunil Kanoria, please. Thank you so much, sirs. It was a great session.